Thank you very much and good afternoon everyone. Thanks so much for your attention. I'd really like to welcome our panel members today. We have Alison Ball from the Northern Australia Infrastructure Facility, and thank you, Alison's joined us at very late notice today. So we really appreciate that. Andrew MacPhillamy, Head of Priority Sector Investment from the National Reconstruction Fund. Thanks, Andrew. Mark Couchman, Domestic Lead Institutional Export Finance Australia. And last but certainly not least, Annaliese Eames, the Chief Legal and External Affairs Officer from Australian Strategic Minerals. Thank you very much. Government investment is about unlocking momentum. When the government steps in with grants, strategic loans or tax settings, it sends a clear market signal. That backing can help to attract commercial lenders and offtake partners, which is critical for our industry. Mark, we're going to start with you, if that's okay, and talk about the current landscape of government investment. How is government and Commonwealth Corporate Entity, or CCE, investment currently being deployed to support mining and project development?
Thanks very much, Kerry. And just in terms of EFA, we're one of 4 Commonwealth investment vehicles. So Andrew here from the NRFC, another one of them, and Alison from NAIF. The fourth one is Clean Energy Finance Corp, and between the 4 of us, depending on the type of project, we work pretty closely together from time to time. But in terms of EFA, the way we operate, we have 2 particular accounts. We have our commercial account, and that's where we raise capital using our own balance sheet. And we look at similar to a bank. We also have our national interest account, and if there's a particular transaction that's beyond the appetite of EFA's own balance sheet, then we consider the national interest account, and that's the government's balance sheet. There's a number of initiatives that fall within the national interest account, such as Future Made in Australia, and more relevant to this audience is the Critical Minerals Facility, which the limit on the current facility there is about 4 billion, and we've got approvals in place of 2.6 billion. Andrew, I know you're chafing at the bit to also talk about some of the other initiatives that NRFC have been involved in.
Yeah, I could touch on a couple. As Mark said, the different agencies have different mandates. From an NRFC perspective, we have quite a broad mandate. We've got 7 different priority areas that we focus on, but resources is called out specifically as one of our priority investment areas. We have $15 billion committed to the fund across all of those 7 different sectors. We've been quite active in the resources space over the last 2 years since being set up. Probably one of the things that makes the NRF a little bit different is we've got quite a bit of flexibility in our capital structuring. We can do debt as well as equity, and we have, I think, our resources directors in the room here. Lauren McGregor, who's based in Perth, so feel free to come and say hello.
Thank you. And Alison, did you have anything to add?
Yeah, the NAIF is a $7 billion facility. Because we focus on Northern Australia, obviously resources is a huge part of that. And I think of our commitments so far, the resources sector makes up probably around half, just under half. And our pipeline also, a significant portion is resources. We've got 500 million of our 7 billion earmarked for deployment for critical minerals projects. And so there's some big projects that have been announced, our commitment and investment in those, and of course more to come.
Thank you, and we'd love to hear about how these mechanisms are actually working in practice. So could we get a bit of an example, an Alpha HPA perhaps, or one of the other examples? It'd be great to hear about that.
Oh, that's right. Alpha HPA, that's a high purity alumina project in Queensland, so that's a critical mineral. NAIF and EFA are the co-lenders of that project, and I guess that is an emerging industry, a difficult commodity, not really any commercial appetite, so it was a great example of where the government stepped in to facilitate that project. And I know our support was absolutely essential to that moving forward. So they've had a successful equity raise, still more to come. But that's a good example of, I think, the national interest account on EFA's side and NAIF's commitment to delivering the government's the policy on the critical mineral strategy in action.
One of the key roles that we do play is around crowding in private capital, crowding in commercial lenders, and also other export credit agencies. And Alpha HPA is also a great example of that in terms of crowding in groups like QIC in coming in there, who's a great strategic sponsor to have there.
Well, thank you, and we know that government support is critical and it really gives confidence to investors, so it's great to hear about that. We'd love to hear from Annaliese on the programs that deliver impacts and what gaps might exist at the moment, or any suggestions that she has.
Thanks, Kerry. It's a great question. So the products that the other panellists have described are absolutely critical and really important in helping, but largely they're debt products with a few notable exceptions, and also will be contingent on meeting a few key requirements. So a couple of the challenges, particularly in the rare earth space, which is an emerging industry, we're actually trying to fund and establish an industry, are some of the things like, we need to establish bankable offtake, we need to establish that it is a feasible and sustainable ongoing market. So I really think that it's almost a twofold challenge. These debt products or other type of products are fantastic and they're really useful, but at the same time we need to be looking at a broader policy environment that creates the growth for this. So I was really excited, as I'm sure a lot of my colleagues were, to see the announcement overnight about the framework agreement between Australia and the US that is looking at a co-investment by the governments into these types of projects to create this alternative supply chain, but more importantly is looking at some of the important factors that will establish a viable industry. So looking at offtake, feeding into the current government's initiative around the critical mineral strategic reserve that could provide an optionality or potential for offtakes, and then also a price setting mechanism. That was very interesting. But also, I think one of the other exciting announcements was the announcement of Arafura receiving equity funding from EFA, which is showing the flexibility of that organisation to provide additional products and financing and different types to fund projects like ours. So Mark, I'd love a little bit more colour on that.
Yes, so within EFA we do have some flexibility around the products we can provide. So we can provide loans, we can provide guarantees, and we also can provide equity. So in the case of equity, that sits under our national interest account. In terms of the announcements overnight, and the US-Australia critical mineral framework, I think there was a commitment there around financing $1 billion worth of investment over the next little while, and the first two announcements that have come out of that have come from Australia, being 100 mil US equity into Arafura, and secondly up to 200 US commitment for Alcoa's gallium recovery facility.
And if I understand, that is the first equity investment in an Australian critical mineral project by the government? Or do you have other examples?
Not by the, yeah.
Yeah, I could probably give a couple of examples with. So our first equity investment was a commitment into Arafura using a convertible note. So the strategy there is essentially to come in to cornerstone the equity component of the raise. That the debt is largely spoken for, but in that example, it's the NRF really trying to signal to the market and get that confidence to help with the raise. I think the news overnight will further support that, and that's the next big step for Arafura to complete the equity raising. Separately, recently the NRF cornerstoned Liontown equity raise, and it was a very similar strategy in the sense of it was us coming in. We'd done a lot of diligence on the asset, on the management team, and our approach was essentially to cornerstone the equity raise, to send a signal to the market, and in that case it was quite effective in bringing investors in and getting an oversubscribed raise. So it did what it said on the tin. We're very happy with that outcome.
Oh, that's great. Thank you, Andrew. And we're going to hear a little bit of a case study now from Annaliese and AAusIMM. They've secured various federal and state grants, including the Critical Minerals Development Program, and more recently debt support letters from Export Finance Australia and US EXIM, as well as backing for the new production tax credit. So we'd love to hear about your experience and learnings along the way. Thank you.
Yeah, thanks, Kerry. So it's probably an understatement to say the world of rare earths is volatile. So our share price has gone through quite the roller coaster over the last couple of years. So accessing capital on the equity markets is not always easy to do. So this government support, no matter what form or how big or how small, has been absolutely critical. So we've received just over $20 million in grants from the both the Australian federal government and the New South Wales state government. That has been absolutely critical in advancing our project to date. Most recently, we received just over $6 million in grant funding from the federal government under the International Partnerships in Critical Minerals. That has funded our engineering work on looking at a new way to execute our mine project, the Dubbo project, which has delivered a almost $700 million reduction in capital costs and shown a new viable way to get to rare earths production quicker and cheaper. So that's been really, really vital. The other thing is that we've had fantastic support from EFA, but also US EXIM. Last year we received a letter of interest from US EXIM for $600 million US funding for the construction phase of the Dubbo project. And this has been really critical because it shows support. We've got our debt stack already up and running. I should also mention we also have another letter of interest from Export Development Canada. So it's showing a real coordination amongst the allied nations. And I think what it's helped us to do is, and the other panellists have alluded to it, is it helps create some confidence in the project and draws in other capital, and that will just continue. But lastly, I think the production tax credits was obviously a very welcome opportunity. Anything that can establish that there is a sustainable way to run these projects is really critical, and I think the production tax credits went to that. The New South Wales royalty deferral contributes to that as well. And I'm very excited to see what the government announces early next year regarding the Critical Minerals Strategic Reserve. It's that combination of policy, funding, government and industry cooperation that I do think can kickstart what is a very important industry that we need to develop.
Thank you so much. That's a fantastic summary, and we have really enjoyed watching the project develop. Did you want to say something, Mark?
Yeah, so in terms of the Australia-US critical mineral framework, we've identified, or the government's identified, around about 8.5 billion worth of project investment that's going to be required. And Annaliese spoke about the importance of letters of support, letters of interest from US AAusIMM. So that's important in terms of supporting the acceleration of that investment, and it's certainly a key initiative of EFAs.
That's fantastic. And something we touched on before was structuring finance to actually crowd in private investment, and I know that all the agencies do that well. We'd love to hear a little bit more about that. How can government-backed finance be structured to complement rather than displace private capital?
I'll have first crack at that one. I think what the NAIF can do, and probably common with the other government agencies, is really use our risk appetite to best advantage, and that can often mean probably the most commonly deployed way is to provide longer tenor debt, especially with resources projects that will have often a very long reserve life. Commercial lenders will top out at 5 or 7 years, but we can come in with a longer tranche, and that means that commercial banks can come in and suit their policy and their strategy and their risk appetite, and we can provide that longer tenor that really underpins the project. We often have appetite for a larger ticket size, depending on the nature of the project as well. And the other thing is, with our higher risk appetite, we can often look at subordinated debt sometimes a smaller amount, rather than just being a senior lender equal with the other lenders.
Yeah, I'd agree with Alison. On the debt side, the longer tenor debt is something that we're seeing as quite effective in crowding in. And I think that equally it's important to point out that we're not there to crowd out the commercial banks. That's not our job. So that longer tenor is something that's quite attractive from a debt perspective. And then, from an equity perspective, that's a tool that we can use to take more risk as well. And I'm giving some examples around how we've used that with Arafura and Liontown.
Do you have any comments, Mark? And so you've spoken about, I guess, the term of the loans, but is there any flexibility around the repayment capabilities with any of the financing?
I think I probably speak on behalf of everyone, and that is that we do start with a relatively blank page. So we'll look at each project on its merits and see what we can structure to come up with a solution that really works for that project. So there's no one-size-fits-all template kind of a loan that we do. I don't think we've ever done 2 loans that are the same in any way. So I guess that can really suit some of these critical mineral projects that have some very unique challenges.
Oh, that's fantastic. Did anyone else want to add anything there? I think Alison probably covered it, that it's quite flexible and unique based on the project. And what about the reporting requirements once you do obtain public support? Is there anything additional or onerous that you wanted to explain about those reporting requirements?
Yeah, so anyone looking to get Australian government funding, if you're building a project in Australia, either the project proponent or the lead EPC contractor must be WHS accredited. So we've seen a number of projects that have quite leading EPC contractors, but they're not accredited, so they're having to go through that accreditation process.
Did anyone else want to comment on the reporting requirements?
I'd just say at a high level, typically the data that we need, it's data that supports the public policy outcomes that we're seeking to support. So there's a strong nexus. So there are the obvious pieces like jobs, emissions, representation of underrepresented communities, etc.
I'll just add, for NAIF, a part of our mandate is public benefit and positive Indigenous outcomes, so we have 2 elements of reporting for our loans on that.
Thanks, Alison. And I guess looking ahead, what do we see in the future of government investment? We've had some great news overnight, so I'd love to hear from each of you on, I guess, the role of your investment vehicles and how you see those into the future. And of course, Annaliese, we'd love to hear anything you've got to add as well.
Yeah, I think it's clear what you've heard overnight is, the framework is really around accelerating the investment funding of these critical mineral projects into the future. The projects, as we all know, they take time to build. You're not going to turn one on next year, but in 3 to 5 years' time, I'm sure the landscape in Australia is going to be very different.
Andrew, did you have any comments?
Yeah, I'd probably add, there's obviously the critical minerals and rare earths thematic, which is all through the press and a hot topic. Probably the key for us, for the NRF and similar for the other CIVs, crowding in is really key. It's about enabling that investment through us taking a strategic stake or cornerstoning or being there in the debt. So I think you'll see us working together collaboratively.
Actually, Andrew, I was going to ask if someone wants to get in touch with you, or what is the process? Do you each contact the other and say, I've just been contacted by this great project, can we work together and complement each other, or how do people get in touch?
So we regularly engage with each other. The other point to note with EFA and USEXIM is we have an agreement with USEXIM around the single point of entry. We've seen with a number of announcements overnight in terms of letters of support with EFA, letters of interest from USEXIM, that initiative playing out live.
So once someone does contact you, you'll make the other introductions, and it's
Yeah.
That's great. Alison, did you want to talk about the future of or anything coming up for people?
No, I think this renewed focus on critical minerals, rare earths especially, will hopefully see some more projects move into the next phase of their development, being able to be bankable. I guess that's everybody's hope. And I guess with government support in the capital structure, that will also just hopefully crowd in and encourage more investment and propel these projects along. They take long enough to develop as it is, so we're really hopeful this will accelerate.
Thank you very much. Did anyone have anything that we haven't covered that you'd like people to know or that you'd like to raise today?
Only to say that, we really welcome all inquiries. If your project's in Northern Australia, we're always happy to have a chat, explain our mandate, see where a project might fit in, or if not, refer either to the other CIVs or to commercial lenders and the like.
Thank you very much to the panellists, and thanks to the audience for listening to us as the last panel for today. Thank you. Have a great night.